Hello and welcome back to the channel. Your go-to source for understanding the complex world of hard-to-borrow stocks and short squeeze dynamics. Today, we're diving deep into a fascinating case from the healthcare sector, NUWE Inc., trading under the ticker NUWE. This is a company that's been lighting up our screeners, and for very specific reasons we're about to uncover. Stick around as we break down why NUWE has become a hard-to-borrow name, what the numbers are telling us, and what this could mean for its future price action. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. NUWE Inc. is a microcap medical device company focused on ultrafiltration therapy. They develop, manufacture, and commercialize systems like Aqueduct FlexFlow and Aqueduct SmartFlow, which are crucial for treating patients suffering from fluid overload, often due to heart failure. It's a vital medical niche. From an investment perspective, NUWE currently has an estimated float of just 0.4 million shares. Keep the tiny float number in mind as a critical piece of this puzzle. What is cost to borrow and why it matters? So, what does it mean when a stock is hard to borrow? It directly relates to something called the cost to borrow, or CTB. This is the annualized fee that short sellers have to pay to borrow shares before they can sell them. When a stock CTB starts to skyrocket, it tells us a few things. Either there's a huge demand from short sellers who are willing to pay a premium to bet against the stock, or, more often, there's an extreme scarcity of available shares to borrow. When borrower fees climb significantly above 100% annually, it highlights just how tight that supply truly is. Why this stock is hard to borrow right now. Now, let's talk about NUWE Inc. and its current borrow landscape. NUWE has appeared on our hard-to-borrow screener with an astonishing annualized cost-to-borrow fee of 698.5%. Yes, you heard that right, almost 700% per year. This indicates immense pressure on the borrower supply. While the exact number of shares currently available to borrow is unknown at this moment, a fee this high strongly suggests it's incredibly low. Combined with NUWE's minuscule estimated float of 0.4 million shares, any significant short interest or buying pressure can quickly create a bottleneck. Our internal composite squeeze score, which factors in CTB, borrower supply, float, and momentum, currently rates NUWE at 41.4 out of 100. Squeeze mechanics explained. For those new to this, a short squeeze happens when a stock's price begins to rise, putting pressure on short sellers who borrowed shares and sold them, hoping to buy them back cheaper later. When the price goes up instead, these short sellers face increasing losses and rising borrower fees like NUWE 698.5%. At some point, they're forced to buy back shares to close their positions and cut their losses. To chart animation of price rising and short sellers covering this forced buying adds to the demand for shares, pushing the price even higher, which then triggers more short sellers to cover, creating a rapid feedback loop. While high cost to borrow often precedes a squeeze, it's crucial to remember that it doesn't guarantee one. It can also simply mean that short sellers have very strong conviction that the stock will eventually fall, and they are willing to pay dearly to maintain their short positions. Dilution risk check. Before getting too excited about squeeze potential, we always run a dilution risk check. Dilution occurs when a company issues new shares, increasing the total number outstanding. This can effectively offset or negate any buying pressure from a potential squeeze by flooding the market with new supply. For NUWE, we have good news on this front. Our check found no recent dilutive SEC filings such as -1, -3, or 424B forms in the last 90 days. This means, for now, there isn't an obvious near-term risk of the company directly issuing a large number of new shares to the market. Recent reverse split watch. Another critical factor for NUWE Inc. is its recent reverse stock split. NUWE executed a 1-for-35 reverse split just 38 days ago, on June 26, 2026. A reverse split reduces the number of outstanding shares and, in theory, increases the share price proportionally. It also, critically, reduces the float, making it even tighter. Historically, many microcap stocks, particularly those that have undergone a reverse split, tend to experience renewed volatility or even a price pop within about a month after the split. This isn't a guarantee for NUWE, but it's an observed pattern in certain situations, and NUWE is squarely within that historical time frame. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's look at NUWE's recent price action. Show chart of NUWE. Unfortunately, despite the high CTB, the stock has seen significant downward pressure. Today, NUWE is down 7.47%. Over the last 5 days, it has dropped 16.58%, and over the past 30 days, the stock has fallen a substantial 64.62%. Highlight price drops. Current volume is also quite low. Today's volume stands at 1,656,145 shares, which is only about 0.3 times its 30-day average volume of 4,757,043 shares. This low relative volume could indicate a lack of current interest, but it also means that any significant influx of buying pressure could have a more pronounced impact due to the thinly traded nature and small float. To monitor NUWE, watch for continued increases in the cost to borrow, a further reduction in available shares to borrow, and especially any sustained increase in buying volume and positive price momentum. NUWE is, Inc. presents a compelling case study in the world of hard-to-borrow stocks. With an incredibly high cost to borrow of nearly 700%, a tiny 0.4 million share float, and recent reverse stock split, it certainly fits the profile for extreme volatility. While the recent price action has been bearish, the underlying mechanics of a potential squeeze remain highly relevant for this medical device innovator. It's a prime example of how short interest and borrower availability can create unique dynamics, even in challenging market conditions. What do you think about NUWE's potential? Let us know in the comments below. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth analyses, and share your questions. We love hearing from you. Thanks for watching, and we'll see you in the next video.